Hey everyone, imagine this. GameStop, the retailer that took on Wall Street, pulls off a move so bold it could rewrite the rules of the stock market. What if GameStop issued a dividend, not in cash, but in Bitcoin? Picture it, a tiny chunk of Bitcoin sent to every shareholder based on the official number of shares out there. Sounds wild, right? But here's the kicker. It could finally expose one of the dirtiest secrets in finance: billions of illegal naked shorts. Let's break it down and see why this could be a game changer. First, why Bitcoin? Unlike cash or stock dividends, Bitcoin lives on the blockchain, a public, unchangeable ledger that tracks every single transaction. If GameStop says, hey, we've got 76 million shares outstanding, so here's a Bitcoin dividend for each one, every payment gets recorded for the world to see. Now imagine millions of shareholders claiming that dividend. If the number of claims shoots way past 76 million, something's up. That's where naked shorting comes in. Synthetic shares created by short sellers that aren't supposed to exist. With Bitcoin, you can't fake it. The blockchain would show every wallet cashing in, and if billions of extra shares pop up, it's proof. Cold, hard, undeniable proof that the market's been rigged. Brokers and hedge funds couldn't sweep it under the rug like they might with cash. So let's talk about how blockchain transparency makes this work. Think of the blockchain as a giant open notebook. Every time a Bitcoin moves, it's written down. Who sent it, who got it, and how much. No one can erase it or fudge the numbers because thousands of computers worldwide keep the same record. It's like a live audit that never stops. For GameStop, that's gold. A Bitcoin dividend wouldn't just be a payout, it'd be a spotlight shining on every share, real or fake. If the numbers don't add up, the world would see it in real time. Compare that to traditional dividends, where brokers can hide synthetic shares by paying out cash from their own pockets. With Bitcoin, there's no hiding. It's all out there, transparent as glass. Now, you might be wondering, has anyone else tried a crypto dividend? Actually, yeah. Back in 2021, a company called Overstock pulled a similar stunt. They issued a digital dividend, not in Bitcoin, but in a token tied to their own blockchain platform. The goal? Flush out naked shorts. Short sellers freaked out because they couldn't easily replicate the token, and it caused a mini squeeze as they scrambled to cover. It wasn't as public as Bitcoin's blockchain, but it worked enough to make waves. Then there's Tether, which once floated the idea of crypto dividends for shareholders, though it didn't fully take off. These examples show crypto dividends aren't just theory, they've been tested. Bitcoin, though, takes it to another level with its global reach and rock-solid ledger. GameStop could be the first to swing that big. But let's zoom out. Why does this matter? Naked shorting's been a ghost story in the market for years, especially with GameStop. Apes have screamed about it since the 2021 squeeze, saying hedge funds created fake shares to tank the price. Problem is, it's tough to prove. The system's murky. Brokers, clearinghouses, and regulators keep the data locked up. A Bitcoin dividend cuts through that fog. It's not just about payouts, it's about forcing the truth into the open. If GameStop pulled this off, it'd be more than a flex. It'd be a reckoning. Wall Street might have to face the music, and retail investors could finally get the validation they've been chasing. So, wrapping this up, GameStop issuing a Bitcoin dividend isn't just a cool idea, it's a weapon. It uses blockchain's transparency to expose manipulation no one can deny. Other companies have dipped their toes in crypto dividends, but Bitcoin's the heavy hitter that could settle the score. For GameStop, it's a chance to flip the script, prove the skeptics wrong, and maybe, just maybe, change the game for good. What do you think? Could this be the spark that lights it all up? Let's hear it.